You're welcome back. You're watching Business Incorporated from Channels Television. Now, China's Commerce Minister says the international community hopes the G20 can play a greater role in leadership as trade ministers meet in Shanghai. Now, this comes as the global leaders deliberate on how to improve international trade.
The G20 trade ministers meeting got underway in Shanghai on Saturday. When he came up to open the meeting, China's Commerce Minister said under the current international climate, many were hoping the G20 would be able to play a greater leadership role. According to him, major economies must lead the way in tackling problems, including slowing trade and sluggish growth. China's Commerce Minister says the outlook for the global economy remains grim despite it having overcome the impact of the 2008 financial crisis. Last week, the head of the World Trade Organization said global trade is likely to remain sluggish going into the third quarter, and vigilance is needed against any measures that limit trade and to counter very damaging anti-trade rhetorics.
In
the current situation, the global community has greater hopes that the G20 will play more of a leadership role in solving the more prominent issues we face and will provide impetus for global recovery and growth.
To boost trade, the G20 ministers from the world's major economies agreed to cut trade costs, increase policy coordination, and enhance financing. The WTO expects 2016 to be the fifth consecutive year of less than 3% growth in global trade.
Let's head back to the markets, this time in the U.S., where stock index futures gained as global equity markets shared hopes of more monetary stimulus in Japan and strong jobs data from the U.S. Now, we have the non-farm payroll released on Friday showing 287,000 jobs being created in the month of June, beating expectations from analysts. The unemployment rate read 4.9%, also better than forecast. Now let's listen to VOA Channels TV correspondent Jill Malandrino as she reports on the market.
U.S. markets are finishing the week on a high note following a very strong jobs report. We can see the S&P, Dow Jones, and NASDAQ up just about 1%. Crude oil was trading higher as it trimmed its largest weekly decline in 5 months. Meanwhile, gold is set for its first two-day drop since the Brexit referendum. The unofficial start of earnings season is on July 11th when Alcoa reports after the market closes. According to S&P Global Market Intelligence, only 4 of 10 S&P 500 sectors are projected to have positive earnings growth, including consumer discretionary, industrials, utilities, and healthcare. The energy sector is once again expected to post the largest decline in growth, though the decline is an improvement from first quarter results. Other sectors with large declines in growth are financials, materials, and information technology. Excluding the energy sector drag, S&P 500 earnings growth would still decline 0.7% in Q2. Now, turning to what made business headlines on the continent this week, the Brexit vote has had little impact to trade and markets in Africa. In fact, South Africa stocks have had their longest run of net foreign buying since 1999, even as the IMF downgraded the country's growth forecast. The Central Nigerian Bank has been moving to reassure bank customers unsettled by the CBN's decision to take over management of Sky Bank, forcing the resignation of members of the bank's board and management team in what it called proactive and unavoidable regulatory steps to forestall the bank from falling into distress. Since the decision, bank customers have been making panic withdrawals from their accounts in various banks across the country in response to speculation that the country's entire banking system was at the verge of an imminent crash. A Russian consortium, RT Global Resources, which was announced as the best preferred bidder for the financing and construction of the $4 billion U.S. greenfield oil refinery in western Uganda, has walked away from the deal in unclear circumstances. And to end the week on a positive note, the IMF completed its mission to Côte d'Ivoire to negotiate a 3-year economic program. The IMF was impressed with economic performance over the past 4 years and maintains a favorable outlook on the nation. For Channels TV, I'm Jill Malandrino from the NASDAQ market site.
And Cubans brace for hard times ahead as President Raul Castro warns of spending cuts and energy shortages. The country's gross domestic product grew by 1%, less than a 2% growth forecast.
El primer semestre, el Producto Interno Bruto creció
In the first half of the year, the gross domestic product grew by 1%, half of what we had proposed. This was caused by the exacerbation of the external financial restrictions caused by the failure to fulfill export income, along with the limitations that some of our primary commercial partners are facing due to the fall in the price of oil. Along with this, there has been a contraction of agreed-upon oil from Venezuela, despite the firm will of President Nicolas Maduro and his government to fulfill them. Logically, this has caused additional tension in the Cuban economy's operation. I must recognize that there have been some delays in current payments to providers. In this sense, I wish to thank our counterparts for their confidence and understanding in the transitory situation we are going through, and to ratify the government's firm will to make up the pending past due payments. We will not give up the aim of continuing to re-establish international credibility in the Cuban economy. As we expected, with the purpose of planting dejection and uncertainty in the people, rumors and forecasts of an imminent collapse of our economy have started to appear, with predictions of a return to the acute phase of the special period that we faced at the beginning of the 90s of the last century, and that we knew how to overcome, thanks to the Cuban people's ability to resist and their unlimited confidence in Fidel and the Communist Party. We cannot deny that there will be some impact, including worse than currently, but we are prepared and in better conditions than then to revert it.
Now let's take you to the forex market. The FMDQ OTC has announced that Stanbic IBTC Bank has sealed a $16 million OTC FX futures deal on the FMDQ. According to the exchange, this deal further strengthens the Nigerian OTC FX futures market for foreign portfolio investment. Daima Iyagba is a forex dealer with UBA, and he joins me to discuss these among other issues on the markets. Good afternoon, Daima.
Yeah, good afternoon.
Welcome to the program. Now, the deal by Stanbic IBTC is a good development, according to many analysts, especially for the FX futures market. What is your reaction to the attraction of the market right now?
Well, the market is actually very attractive right now. It's showing a lot of promise, and we see a lot more of these deals happening in the close future. I see a lot of foreign investors really looking at the forward market to invest in Nigeria's economy. So next 1 or 2 weeks, we should see much larger deals happening in this market.
Now, it's the beginning of a new trading week. How is the Naira doing today?
The Naira has been stable thus far, opening at 282 levels, but has remained calmed, only peaking at 282.5. But it's been very stable.
Okay, if you're still there, what sentiments are we expecting for the rest of the week?
Well, we're expecting the CBN to continue to intervene in the market to help improve liquidity, and we also expect the same amount of demand to hit the market. So it's still a stable forecast for the rest of this week. I don't see it getting any much higher than it really is right now.
All right, thank you so much, Daima Iyagba, forex dealer with UBA. Thank you for your time. Sierra Leone's economic growth should reach 4.3% this year as it recovers from the twin shocks of an Ebola epidemic and a slump in iron ore prices that shrank its economy by 21.1% in 2015. According to the International Monetary Fund, GDP growth in the West African state should touch around 6.5% by 2020 as the effects of the shocks subside. It also said that diamonds and agriculture form the backbone of Sierra Leone's economy, but iron ore is also an important export. Now, the country is recovering from an Ebola epidemic that killed nearly 4,000 people and severely damaged the mining sector. We'll go on a break now. I'll be right back.